The impact of the Silicon Valley Bank collapse is still reverberating across the entire economy, but among the venture capital industry, it will undoubtedly be significantly altered moving forward, with markdowns of 25 to 30%, according to Bloomberg Intelligence. Could the VC ratio gap, already at devastating numbers, also be worsened? Joining us now to discuss this is Freada Kapor, Klein, and Mitch Kapor, founding partners of Kapor Capital and co-authors of Closing the Equity Gap. Nice to see you both. We want to circle back to that gap, but Mitch, I want to start with you on the overall impact you're seeing on the VC industry as related to the Silicon Valley collapse.
Well, I would say Silicon Valley Bank reflects both the best and the worst of tech culture, and I really think Freada has her finger on how that is playing out.
Well, it's playing out in a lot of blaming, a lot of finger pointing about who caused the problem, and it should be playing out in terms of an introspective look at the culture. The best parts of Silicon Valley Bank and the best parts of the culture: risk-taking, innovation, understood the tech ecosystem. The worst parts: insular, clubby, exclusionary.
Freada and Mitch, either of you here, feel free to jump in. Just in terms of what you're hearing from your clients, from these startups, how worried they are about what just played out at Silicon Valley Bank, and also how that shaped some of the advice that you're offering some of your startups now.
Well, there was a lot of panic a couple of weekends ago, and many companies realized that they hadn't had any guidance on treasury management. So one of our companies had all of their money in one Silicon Valley Bank account, several $1 million, a non-interest-bearing account. They had no banking relationship manager, and that was a startup with Black founders. Other of our companies that were more inside the club had a lot of guidance and a lot of help along the way. We have spent a lot of time helping our companies diversify their accounts. A relatively small proportion of our startups were exclusively with Silicon Valley Bank. We're always available proactively to help them think through their options, where to get their line of credit. But I do think people are quite worried. What does it mean? Is there another bank that's going to fall?
Yeah, it is concerning. And again, for either of you, was the VC community guilty of, if not illegal, guilty of some unethical behavior, pushing some of these startups to not just use Silicon Valley Bank, but to go all in with Silicon Valley Bank and then taking some rather generous kickbacks from the bank?
Well, I was going to say that I think it is the elite VC firms push their companies to go exclusively with Silicon Valley Bank and require them to put all of their money there. The bank did in many cases, which is certainly not good policy. So I think it takes a long look. If VCs are really going to be supportive of their companies, they have to act in the company's interests and not just be clubby with the bank.
Freada, when we talk about the fallout here, the SVB collapse, how do you see this, or do you see this exasperating the equity gap that already exists right now? And according to some of the numbers that you sent over, less than 2% of VC funding goes to Latino or Black founders.
Yes, the numbers are shocking. The numbers have been poor for many years. After the murder of George Floyd, there was an uptick in the amount of funding, especially for Black entrepreneurs. But with the downturn in 2022 for the whole market, the funding to Latino-led businesses, Black-led businesses dropped, but it dropped even more significantly. So there's a 36% drop in overall VC dollars, but Black entrepreneurs saw a 45% drop in their funding.
Mitch, why is that gap so wide, and how do we lessen it?
Well, I think Silicon Valley likes to think of itself as a meritocracy, but in practice, it's really more of a mirrorocracy. Investors are looking to fund people who look like themselves, who went to elite schools. Our view is that what talent is often overlooked and underestimated, and that if you use a yardstick of what we call distance traveled, meaning where did somebody start in life and how, under their own steam, have they overcome hurdles and obstacles, you wind up making a better set of choices about who to fund. And by the way, it's a more diverse set of entrepreneurs.
Yeah, and you've been telling this story. You've also launched Kapor Capital here. in terms of you're really a pioneer when it comes to impact of investing and trying to address some of these issues that seem to not really see much improvement year after year after year. Freada, when you're taking a look at certain ventures that you want to be invested in, what is the guideline? What are some of those characteristics that you're looking for that come in place among many of the startups that you speak with?
Well, as Mitch said, we're looking for distance traveled. We're also looking that the idea of their business came from their own lived experience. So we have many founders who, for instance, Block Power, that's been in the news a fair amount, a Brooklyn-based company, is doing electrifying and decarbonizing buildings, especially in the urban core. Danelle Baird, that founder, grew up in Bed-Stuy, and they used an open oven door as their heating source. Dangerous and unhealthy, and he cares passionately about making sure that low-income families, communities of color, are on the front edge, not the back edge of solutions to climate change.
Yeah.
All right.
If I could add.
Yep. Go ahead.
All the companies we invest in close gaps of access, opportunity, or outcome for low-income communities and communities of color. So that's our investment thesis, and we have 150 plus companies on that.
The book is Closing the Equity Gap. Mitch, Freada, really appreciate you both being here. Kudos to you.